The effects of the current economic crisis have touched everyone. Even if you still have a good job and a paid-up mortgage, chances are your monthly 401k statement will remind you that you've lost a good chunk of your savings. Trillions of dollars have evaporated from those accounts that have become the prime source of retirement funds for a majority of American workers, affecting their psyche and their future. If you're still young enough, there's time to rebuild and recover. Alan Weir, who turned 60 this month, showed us his latest 401k statement, which he hadn't had the courage to open up.
I'm afraid.
You're going to open it now?
You want me to? Let's do it.
There's good reason for his trepidation. Nearly half of his life savings have vanished in a matter of months.
It went down again.
How much are you down overall?
Oh, about $140,000.
Do you think you'll ever get it back?
I would probably never see it come back. I was looking to retire probably when I hit 62. I can't do it now. I'll probably be working until I'm at least 70.
Tell me about your 401k.
Does this answer the question?
This is what it was in 2005. 2007, you're down below 2005.
Right. Another one went down almost $40,000. One was
Right.
88,000, and then it went down to like 50.
How old are you?
54, and I live alone. I don't have any children. I've been a career girl all my life, and it's been a great career, and I don't deserve this. I'm sorry.
It's all right. Have you had any nibbles?
All the nibbles I've had, I get beat out by top models who can type. And I have experience and dedication and loyalty, and I can make any boss shine. I can. If you're out there, I'll relocate anywhere for you.
What's the hardest part?
I'm no longer sitting in a computer or driving in a car to a call. You know, suddenly I'm standing for 4 to 6 hours and greeting people or making drinks or trying to learn the process and the food business thing, which is very difficult.
It's tough, but I'm proud of him. At his age, to be doing what he's doing.
The 401k drop was tremendous, is tremendous at this point in time, and that's where the savings was. So that's our hurt right now.
We can't live our vision of our dream of retirement. That's the worst part. Many people can't.
And what was your dream?
Our dream was to have a log cabin up north, Leland area, and just live a nice, quiet life. And we can't do that.
Do you think you'll ever be able to retire?
I don't
No.
see that day. Can no longer see that day.
401k is the absolute best way people can save for retirement. They absolutely are the best retirement vehicle we have.
How can you say it's the best available if it has let down tens of millions of people at the time they need the money the most?
That's not a 401k problem. That is our entire investment system. This is about the markets went down for everybody. Nobody was saved in the current thunderstorm.
The people who are 63 or 64. A lot of those people were thinking about retiring.
Well,
and now they aren't.
Well, I mean,
a lot of them were retired and have to go back into the workforce.
Well, but that was not a 401k problem. That's an investment system problem. The markets go up and down, and if those people chose to take equity risk, there was a logical outcome.
But in fact, the 401k plans that have become the primary source of retirement income for 60 million Americans were never designed to be retirement plans in the first place. Brooks Hamilton has helped design retirement plans for some of the country's largest corporations. He says 401ks turned out to be so much cheaper than funding pensions that many companies decided to freeze their pension plans and replace them with 401ks. The decision created millions of new employee investors for Wall Street and the financial community, and they pounced on the opportunity.
If you go back and track the mutual fund growth in assets, and you track the growth in 401k plans, it looks like a railroad track leading to the sky. They are parallel tracks.
So the big beneficiaries were the mutual funds.
That's right. That's correct. The typical 401k investor is a financial novice. They don't know a stock from a bond. And we give them a list of 20 or 30 mutual funds with really, really powerful names. You know, they sound like, gee, that's where I want to have my money.
What are generally the quality of the mutual funds and 401k plans?
Mediocre. I'm going to be real honest with you. With half the funds on the list, really dogs, what people would characterize as dogs, shouldn't be on the list to start with.
There clearly has been a raid on these funds by the people of Wall Street, and it's cost the savers and the future retirees a lot of money that would otherwise be in their account, independent of the financial collapse.
Representative George Miller of California is chairman of the House Committee on Education and Labor and a staunch critic of the 401k industry, especially its practice of deducting more than a dozen undisclosed fees from its clients' 401k accounts.
Now you got a bunch of economic wizards jumping in and taking money out of your retirement plan, and they don't want to tell you how much. You can't decipher it in simple English, and they're not interested in disclosing it or having any transparency about it.
And most of the people that look at their 401ks have no idea that these fees are being taken out.
No. Where would you find it? Where would you find these fees in this prospectus? You can look on any page you want, and when you're all done reading it, and you will find some of the fees and the commissions here, but you won't find them all, and I bet you won't find half of them.
There are legal fees, trustee fees, transactional fees, stewardship fees, bookkeeping fees, finder's fees, and the list goes on and on. Miller's committee has heard testimony that they can eat up half the income in some 401k plans over a 30-year span, but he has not been able to stop it.
We tried to just put in some disclosure and transparency in these fees, and we felt the full fury of that financial lobbying.
David Ray, a lobbyist for the 401k industry, says he favors disclosing the fees, but his partners in the financial industry don't.
You think most people know these fees exist?
I think they know that there are fees. They don't know exactly how large they are.
Why do you think the financial services industry is opposed to fee transparency?
I don't know that they're opposed to it. I think the issue is...
You don't think they're opposed to it?
Well, they want to keep...
You're a lobbyist in Washington, right? You know they're opposed to it. George Miller hasn't been able to get a bill to the floor.
I think they want to keep the systems as simple and not make changes. They like the way things are, and whenever you push people out of their comfort zones, you know, it's an issue.
I mean, they're comfortable with the situation because they're making a ton of money, or they have made a ton of money.
Well, and their systems are set up in certain ways. You know, this is going to be a big change.
Most of the people that we've talked to are 50 and 60 years old,
Right.
and have sustained these losses, say there is no way they're ever going to make them back.
Right.
Do you agree with that?
I think we have to be truth tellers. I think that when a person has hit this point, and we've had this unfortunate situation, I don't think we can misrepresent what the possibilities are.
And the reality is that money's not coming back that they've lost.
They can't count on it. They have to. Maybe they have long. Maybe if they work 10 more years, it'll come back by the 10. But it's important that they not have unrealistic expectations.
When I got into my 401k, I never even thought of risk. There was a surefire thing. How do we find out about these risks?
Well, that's the problem. We are not educating our participants. And what the Congress should be doing is making education a mandatory requirement for participation in the 401k plan. Here's what happened. The 401k was introduced, and coincidentally, there was a massive 20-year bull market that ensued. So we all got a little bit lazy, and companies got lazy, participants got lazy. But these are risky assets inside of this. And by the way, we made a transfer from pension plans to 401ks. Do you know what happened then? We transferred the risk from the company funding your retirement to you funding your retirement. What a massive transfer of risk just occurred under everybody's noses, and we didn't give people the tools they needed.
High-frequency trading is a part of what we call algorithmic trading, which is basically using computer models to trade. Instead of you leaving it to human error, they're looking for patterns. They're looking for ways to use the computer to come up with ways to trade in and out very fast. All you're doing as a trader is sort of monitoring it, checking the statistics, making sure the situations haven't changed.
A millionth of a second can mean just a penny of profit, but done in huge volumes all day, every day adds up for a huge firm like a Goldman Sachs or a JP Morgan Chase.
Good evening. Traders could barely catch their breath on the floor of the New York Stock Exchange today. The Dow dropped nearly 1,000 points in a half hour and then bungee jumped 2/3 of the way back. News 4's Jackie Walker takes us along for the ride.
Wall Street has never seen a day quite like this. The blue chips dropped almost 1,000 points in less than half an hour during one of the most turbulent trading days in history.
It was a really wild half hour there.
The selling began as traders watched violent protests over spending cuts in the streets of Athens. The fear is that if Greece fails financially, that could trigger a domino effect among other weak European economies. There are reports the sudden drop in the Dow was caused by a trader who mistyped an order to sell a large block of stock. Instead of 16 million, he typed 16 billion.
It's bewildering, it's intimidating, it's frightening, and obviously something has to be done to make sure that this doesn't happen in the future. It's very, very unfortunate.
The Dow recovered enough to close the trading day down 347 points, or 3.2%. In the last 3 days, the Dow has lost 631 points.
The other issues that may be creating volatility, people talk about it, is credit default swaps and what role they've played, for example, in Europe with some of the bonds there. And I'm curious, do you believe that credit default swaps should exist? They should be outlawed? What should happen to them?
Well, they can be a very destructive instrument. I mean, if you think about it, you can't go out and insure my house against fire because you do not have an insurable interest, as they call it in the trade. Because once you insure my house against fire, and you may decide that, that maybe dropping a few matches around my lawn might be a good idea. And credit default swaps, if you don't own underlying debt and you buy a credit default swap, you have an interest in that place getting into trouble. And when a lot of people have an interest in a place getting in trouble, they may start putting out misleading statements about it. I mean, if you had a bank, if you were short the stock of a bank, you might hire, and there wasn't any FDIC, you might go out and hire 100 movie extras to stand in front of that bank. And in effect, you would create your own reality. Now, buying credit default swaps and talking about them and causing the price of credit default swaps to go up creates its own reality to some degree. So I think they are potentially a very antisocial instrument.
Keep hearing that whatever the politicians are suggesting, and admittedly it's all been rather woolly so far, isn't right. Can you pin down exactly what would keep investors happy, make them feel more confident?
That's a tough one. Personally, it doesn't matter. See, I'm a trader. I don't really care about that kind of stuff. I go with what if I see an opportunity to make money, I go with that. So for most traders, it's not about that we don't really care that much how they're going to fix the economy, how they're going to fix the whole situation. Our job is to make money from it. And personally, I've been dreaming of this moment for 3 years. I have a confession, which is I go to bed every night, I dream of another recession. I dream of another moment like this. Why? Because people don't seem to maybe remember, but the 30s depression, the depression in the 30s, wasn't just about a market crash. There were some people who were prepared to make money from that crash. And I think anybody can do that. It isn't just for some people in the elite. Anybody can actually make money. It's an opportunity. When the market crashes, when the euro and the big stock markets crash, if you know what to do, if you have the right plan to set up, you can make a lot of money from this. For example, hedging strategies is one. Then investing in bonds, treasury bonds, that sort of stuff.
If you could see the people around me, jaws have collectively dropped at what you've just said. I mean, we appreciate your candor, however, it doesn't help the rest of us, does it, or the rest of the Eurozone?
I would say this, listen, I would say this to everybody who's watching this. This economic crisis is like a cancer. If you just wait and wait thinking this is going to go away, just like a cancer, it's going to grow and it's going to be too late. What I would say to everybody is get prepared. This is not a time right now to wishful thinking the government is going to sort things out. The governments don't rule the world. Goldman Sachs rules the world. Goldman Sachs does not care about this rescue package, neither does the big funds. So actually, what I would actually tell people, I want to help people. People can make money from this. It isn't just traders.
what they need to do is learn about how to make money from a downward market. The first thing people should do is protect their assets, protect what they have. Because in less than 12 months, my prediction is the savings of millions of people is going to vanish. And this is just the beginning. So I would say be prepared and act now. The biggest risk people can take right now is not acting.
Is Roger, yes?
Roger.
Ah, that's your name.
Roger.
Good. And what do you do, Roger?
I'm a financial consultant.
Ah, financial consultant, eh?
Roger,
yeah,
yes.
Terrific. And Roger, how's business at the moment?
Not bad, thank you. Been a bit quiet lately.
How do you mean lately?
Since the war, been a bit quiet.
Fair enough. Okay, Roger, your special subject tonight is the economies of the European community. Your time starts now. Best of luck.
Thank you.
How much does Greece owe, Roger?
$367 billion.
Correct. And who do they owe it to?
Mostly to the other European economies.
Correct. How much does Ireland owe?
$865 billion.
Correct. And who do they owe it to?
Other European economies, mostly.
Correct. How much do Spain and Italy owe?
$1 trillion each.
Correct. Who to?
Mainly France, Britain and Germany.
Correct. And how are Germany, France and Britain going, Roger?
Well, they're struggling a bit, aren't they?
Correct. Why?
Because they've lent all these vast amounts of money to other European economies that can't possibly pay them back.
Correct. So what are they going to do?
They're going to have to bail them out.
Correct. Where are they getting the money to do that, Roger?
That's a good question. I don't know the answer to that one.
How much does Portugal owe?
Hang on a minute. What was the answer to that earlier question?
Just keep answering the questions, Roger. Where is Portugal going to get the money it owes to Germany if Germany can't get back the money that it lent to Italy?
Just a minute. What was the answer to the previous question? The question was, how can broke economies lend money to other broke economies who haven't got any money because they can't pay back the money the broke economy lent to the other broke economy and shouldn't have lent it to them in the first place because the broke economy can't pay it back?
You're wasting very valuable time, Roger. How much money does Spain owe to Italy?
$41 billion, but where are they going to get it?
Correct. What does Italy owe to Spain?
$27 billion, but they haven't got it. They're broke.
Correct. How can they pay each other if neither of them has any money?
They're going to get a bailout, aren't they?
Correct. And where's the money coming from for the bailout?
That's what I'm asking you.
Correct. Why are people selling the European currency and buying the US dollar?
Because the US economy is so much stronger than the European economy.
Correct. Why is that, Roger?
Because it's owned by China.
Correct. And very well done. And after that round, you've lost $1 million.
I've lost $1 million. I thought you said well done.
Yes, well done. You've only lost $1 million. That's an extraordinary performance, Roger.
I've only lost $1 million.
Very well done.
And that's quite good, is it?
Oh, it's excellent.
Sell everything immediately. Quickly.